Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. We're getting right into it today. Eric Balchunas is here from Bloomberg Intelligence. He's looking at the flows. Eric, what do you have?
Katie, Scarlett, thank you. So the flows are interesting. You know, we had the same thing for like every week for the last 60 weeks. Now, granted, VU at the top is the same thing. This is the year-to-date we're looking at. There was some tax issues in the 1 week, so I wanted to look at year-to-date. SPYM also kind of interesting, but this is what I want to focus on. IMG, that is a ton of money for emerging markets. More on that in a second. RSP, also interesting. These two, in my opinion, are sort of the left-behind part of the market. Mag 7 US did really well. Here's EM and equal weight, which is mid-cap kind of catching up. Financials also, and more EM. So let's look at the outflows, then we'll go back to EM. And the outflows you're going to see, again, SPY. This is a lot of tax loss harvesting outflows. I wouldn't read too much into that, either of these. A lot of this is money coming in, but all told, 100 billion into ETFs. That's a big January so far. Let's focus on emerging markets because this really caught my eye. Because I remember them doing pretty good in Q4, and I was like, let me look at the monthly flows here. So here's EM. This is what it normally does. Little in, little out. You know, it just hasn't been able to get going. A little head fake. But look at this. 3 straight months of mega flows. But this month in particular, which is, by the way, we still got like 2 weeks left. We're already at 11 billion. That would be a record if the month ended. And also, Katie, get this, 72 different emerging markets ETFs have taken in flows, both the trader crowd ones and the retail favorites. That tells me there's breadth and depth, so something's definitely happening with EM at this moment.
Yeah, it certainly feels like it. Eric, thank you. Joining our conversation now is Jed Laskowitz. He is Global Head of Private Markets and Customized Solutions over at JPMorgan Asset Management. Jed, it's great to see you.
Great to be back.
So it's interesting, the chart that Eric just showed, because the narrative that the rest of the world is outperforming the U.S. or at least, punching above its weight has been around for a while, but for a lot of that time, you didn't see the flows necessarily match that performance. When you take a look at your lineup, which of course is global in nature, what are you seeing outside of the U.S. in terms of interest?
Yeah, we expect that to continue. It's a good market backdrop for emerging markets. Obviously performed really well, last year. So we expect, U.S. investors in particular that have been underinvested in emerging markets to continue to diversify. Obviously, strong performance last year helps, but weaker dollar, the likelihood of lower rates in the future, kind of all being favorable for emerging markets. I think there are a number of unloved kind of parts of the market that investors are looking through. I mean, surprised to know that small caps now have outperformed large caps over the last year. Some of that given the big move in performance in the first part of the year. But there's a number of areas I think investors are looking at that have been out of favor.
Mm-hmm. So Stella America was a theme briefly in April, and it didn't last. But there is a move towards diversification. You see that with the flows into EM. Has that been accompanied by more discernment into going into active strategies when it comes to EM, or are people pretty content to stay passive?
I think active, particularly, what we're seeing anyway in our flows, and this is true for U.S. equity and international and emerging market, is investors, particularly in the ETF vehicle, are beginning to look more and more closely at active. We made the decision, 10 years ago to be exclusively focused on active in our ETF business. And as we think about, where markets are moving, where opportunities are, I think, I know we're talking a lot about equities, but fixed income, active fixed income is seeing massive inflows, into ETFs, particularly in active. 80% of the mutual fund industry is in active, but if you look at ETFs, about 80% of the ETF industry is in passive. And to be honest, beating fixed income benchmarks, it's kind of no secret, is a little bit easier because the indexes are not really particularly well constructed. There's a lot of investment opportunities in those indices that are not accounted for. So, fixed income is also an area that we see significant opportunity going forward.
And we look at active. We did have a report out today looking at ETF revenue, which was 20 billion. That's a 28% jump. Normally, revenue only grows half as fast as assets because obviously people are picking the cheap passive. But last year, they grew at the same pace. That's because active is 26% of that revenue number, up from 10% 5 years ago. You're a big part of that. But there's just 60 new issuers in the last 2 years. It's getting crowded. Now there's more active ETFs than passive fighting over that 26%. You were a leader in there, but you've got company now. How do you deal with that?
Yeah, I think this starts with how your investment philosophy and your approach to the markets. And from the very beginning, we were always focused on being the best active manager in the world. We have 8,500 people at JPMorgan Asset Management, over $4 trillion in assets, exclusively focused on active management. 1,300 investment professionals, over 400 research analysts. So when we wake up every day thinking about how we help investors add value, we think about deep research. We visit 5,000 companies every year, do 10,000 company meetings. So the level of resource and focus we put on active, we think is a differentiator, and that's really what we're there to do.
And you have a long title, and I want to talk about it a little bit because you oversee customized solutions. That includes the ETF business. You're also global head of private markets. And the question of privates and ETFs, I mean, we've been asking it for years now, but specifically when it comes to private companies, I know that Eric has asked this question actively, especially on social media. Why not just add basically a sleeve, a little bit of private company exposure into an ETF? We've seen some issuers go this route. Ron Barron, of course, recently launched ETFs. I believe they have some exposure to some of Elon Musk's private companies, but you've also seen this in XOVR. Is this a route that JPMorgan is considering taking?
So I think ETFs have built a reputation of being liquid, transparent, tradable, daily. You can see the value. And yes, I mean, the private markets have gotten bigger, broader, deeper. Companies are staying private for longer. There's more secondary trading than ever before. At this point, we're not doing that in our ETF lineup. We do own private companies in some of our mutual funds. I think over time, we'll continue to look at it. I do think anytime you're going to put private illiquid assets in a daily valued liquid vehicle, you have to do it really carefully. We do it in our fixed income business. We've done that for many years in our mutual fund business in fixed income. As I mentioned, we've done it in equities. We don't have immediate plans to do it in ETFs, but the private space is growing. Private markets are $20 trillion. They're forecasted to be $30 trillion. Is the ETF vehicle the right vehicle for that? I'm not sure yet.
All right, well, it sounds like you're thinking about it. So keep us updated, Jed. It's great to see you. That is Jed Laskowitz of JPMorgan Asset Management. Meanwhile, some interesting news crossing in the last week that NYSE is building a venue for 24/7 trading of tokenized stocks and ETFs. We spoke to SEC Commissioner Hester Peirce yesterday about expanded trading on Bloomberg Crypto. Let's take a listen.
It will allow people in other parts of the world to trade on our markets, and I think that's a good thing. There are certainly operational questions that have to be answered in connection with that. I think we have to think carefully.
And of course, that was Hester Peirce. She is a SEC commissioner talking to us about the prospect of 24/7 trading of tokenized stocks as well as ETFs on Bloomberg Crypto yesterday. Let's talk more about this right now with Michael Blaugrund. He is the Vice President of Strategic Initiatives at Intercontinental Exchange, which is the owner of the New York Stock Exchange. And right now, my understanding is you're in active discussions with the SEC to operate this new platform. What's the latest there? What kind of timeline do you have in mind?
Thanks for having me. We've been engaged with the SEC's crypto task force and other relevant members of the staff. I don't want to, front run any decision making or the process there, but I think we've designed a solution that's intended to largely conform with the existing regulatory structure. So I think we're proposing a responsible, effective, and innovative solution that won't require very significant policy change.
I think as an investor at home, you can roll out of bed, open your phone, hit buy, and own anything in the world via an ETF in like a second for no fee. What are tokens really solving here? Like, is it just to reach people who are on chain already or live in a developing country where they don't have a Schwab account? But that's a really small market monetarily. So what's the problem being solved by tokenization?
You're right that the existing market structure is extraordinarily effective. And certainly, NYSE is, I think, the gold standard of that US equities market structure. That's why we're proposing to introduce a new venue that will be a complement that will offer tokenized trading 24/7. It'll allow for fractional share trading, so someone can enter an order in notional dollar terms, which increasingly is sort of the de facto standard for retail engagement. And it'll allow for instant settlement. So someone could sell something and then immediately use those proceeds either for another trade or in the economy.
And what about stuff you can't get on the regular big board, right? So, I don't know, private equity, art, shares in some new album that Taylor Swift puts out, whatever. Can we tokenize that kind of stuff, farmland in Iowa?
Well, real-world assets are very hot with respect to tokenization. And so I do think that we're going to see both traditional securities make use of the NYSE facility, as well as new digital native token issuance. We expect to work with digital transfer agents as well as DTC to ensure that we have a comprehensive solution.
And I want to talk a little bit about, what is being offered. Not yet shares of Taylor Swift's upcoming album, but tokenized stocks and ETFs. So why include ETFs in this? Why was that an important addition in addition to stocks?
So we're very focused on both investors and issuers. And from the issuer community, you have crypto forward corporates that are very interested in making use of this, as well as large, significant ETF issuers who see tremendous opportunity to put their products into those digital wallets of the next generation of investors.
Just very quickly, what kinds of ETFs do you expect would be most in demand and therefore most actively traded?
I think you're going to see a very broad spectrum of participation. The largest issuers in the world are talking to us.
All right, Michael Blaugrund of Intercontinental Exchange, which is the owner of the NYSE. Thank you so much.
Thank you.
Still ahead, we're going to speak with Matt Tuttle of Tuttle Capital Management on his newly launched meme stock fund next. This is ETF IQ on Bloomberg. This is Bloomberg ETF IQ. I'm Scarlett Fu, along with Katie Greifeld.
And it's time for today's drill down, where we focus on one ETF. Eric, what do you got?
Katie, today we have a newborn baby ETF, Tuttle Capital Meme Stock Income Blast. That is a mouthful. A lot going on there. What does this do? It holds meme stocks that Matt Tuttle picks out from looking at the internet, whatever is like hot stocks and volatile. And it writes options, call options on them and tries to make money from the premium by giving up some of the upside. But because these stocks are so volatile, you get a lot of premium. So you can see it's 99 basis point fee. It just came out. It's under $1 million. It's just, again, newborn. Let's look at the holdings here. You can see some of the meme stocks in here. And you can see how it's very option-y, right? There's a lot of options on here on some of these stocks here. You may recognize, some names in here. I know Coin and Robinhood were in there. Let's look at the performance of some of the meme stocks versus the S&P. The reason I want to do this is like something like JPM is writing call options on the S&P. That's this line here. See how it barely moves? You don't get a lot of income. But here, these meme stocks are all over the map, right? So you can get more income by selling call options on something that can have a huge melt up, right? That makes sense. That's why you get a lot of the yield. But some people would say, well, just own the stocks if you think they're going to go up a lot. This one tries to get yield from that potential.
All right, Eric, thank you. Joining us to talk about this ETF, I'm thrilled to say, is Matt Tuttle. He is the CEO and CIO of Tuttle Capital. Matt, it's great to see you. So let's talk about where this ETF came from. Because, okay, a meme ETF, I get it. Why add income? Was anyone specifically asking for this?
Yeah, and let me correct one thing. We are selling puts, not calls. So we have unlimited upside. And really, what we're seeing in the marketplace is an explosion of these income-based products. So everybody is asking for income. They're tired of 4% or 3% or whatever. And this really comes out of, every day I write a thematic investment newsletter. We're looking at these themes every day, and it really comes out of that research. Because I do have a lot of people saying, hey, how can we invest in this beyond just reading your newsletter?
Mm-hmm. Yeah, it's true that income, all flavors of income, continue to be hot right now. We have so much to talk about, so I'm going to ask you actually about a different ETF.
Sure.
And that is GRFT. That is the Tuttle Capital Government Grift.
But it's not an ETF just yet.
Not just yet. Our Isabel Lee reporting that no major exchange has agreed to list it. That was from the end of 2025. Can you give us an update on where this ETF is? Will it ever get born?
I hope so. I am crossing my fingers and praying for Texas to step up. It's perfect for Texas. Everything is bigger in Texas. Let's go. You guys want to make a splash? List Grift. But that, that probably wouldn't be until June at the earliest. So in a holding pattern unless I do something crazy and decide to do it in Europe.
What kind of feedback have you gotten from prospective investors on a product like this? This idea that you're tracking the perceived value of political access, no matter which side of the aisle you're on.
I mean, great feedback, which is why I want to launch this thing. I get people,
institutional investors, retail investors?
Both. When I filed for it, I just thought, we talk to the retail guys all the time because we do all the 2X stuff. But I had like serious people coming to me like, I want to invest in this. Like, wow, this could be bigger than I thought. And then, of course, I can't launch it. So.
All right, I got another one I got to ask about, which is UFOD. Now, this also isn't an ETF, but just the concept is mind-melting. You're basically premising here, here's an ETF that's going to invest in companies that use alien technology based on the fact that the government is going to release a bunch of information on the UFOs they've collected information on. This ETF, in order to exist, you have to have aliens existing, is that right? Or can it exist without there being aliens?
It can exist without there being aliens. So this will be an ETF on 130 unless someone pulls the rug out from under me, which could happen.
What if there's no aliens?
It doesn't matter, and I can't talk about the portfolio, but if I showed you the portfolio, you'd be like, that's a pretty cool portfolio. Yeah. It's a lot of nice names. And really, the idea is if they're companies that have the tech, we want those guys. But also the retooling that's going to need to be done. Because if we have this tech, your car is obsolete, the way your house is powered is obsolete. Someone's got to fix all that stuff. So we're looking at all those companies. But the cool thing is, a lot of those companies are probably names that you're buying or would like to buy anyway.
And so we are anticipating the government's going to release this information soon?
So who knows? You just had that article, the thing on Twitter about the Bank of England preparing everyone for an announcement. But there's really two steps. So number one is, hey, aliens are real. But what I really want to hear is, do we have that tech? If all it is aliens are real, all right, great. But if it's Roswell was real,
pretty interesting, but
and we have that tech, then that gets really cool.
Just for the record, I agree with you. Aliens are real.
Of course I disagree.
So are ghosts. So maybe you can work on that ETF next as well. That is an investable thing.
That is next.
Matt Tuttle, we only have a minute left with you, and I need to ask you about these Trump media and technology ETFs that recently launched. I believe they launched last week, actually. My understanding is that you are a sub-advisor on those products. How did that come about?
So I mean, we're not a traditional white label, but I like working on projects that I think are really, really interesting. And I think these ETFs are. Nobody has been able to do anything really on the conservative side. Mm-hmm. But also, I don't think anyone's ever had products that if you stripped out the name, you're like, hey, I would buy those. And these are really cool products. It was a project I wanted to be involved in, and we are, and I'm excited to see how it goes.
I feel like we need another hour with you, but
I know.
unfortunately, we
Hey,
have 21 seconds.
I'm a
made-for-TV ETF lineup that's out there, easily.
Amazing. We'll come back soon. That is Matt Tuttle of Tuttle Capital Management. You can read about this drill down when you subscribe to my weekly ETF IQ newsletter. That does it for the TV show, though. I'm Katie, along with Scarlett and Eric. This is Bloomberg.